Welcome back to the channel. We're going over the SP 500, the Nasdaq 100, and exactly how we are moving with these indexes. Are we set up for a bounce? Are we about to break this massive trend and start going back to the upside? Are we going to get rejected? We had Fed minutes today, and I'm telling you right now, this was very big. Let's get to it. So the first thing I want to do is look at this chart and just show you where we're coming into tomorrow, because tomorrow is going to be the biggest day of all. Tomorrow is a massive day. It's GDP day. We're going to get our overall viewpoint on gross growth. And then this is going to be big. This is going to be very big. So it's almost set perfectly in queue with this range right here. So in my opinion, tomorrow is going to be a reckoning day and really show us how we are moving. But what I will say, and I want to cover these minutes and what was said here, and that's the first thing that I want to talk about. Now, I've been through this whole thing, but there's two main points and only two parts I'm going to read to you, or we'll be here forever. And you have to hear these parts of the Fed minutes because it will give you a viewpoint of how they view the market and why tomorrow is so big. Participants commented that after its rapid growth in the last quarter of 2021, real GDP had declined in the first quarter of this year, with net exports and inventory investment making a large negative contributions to the growth. So they're blaming this a lot on exports, shipping, things going on with Ukraine. Basically, that's what they're blaming this on. In short, they're not saying that it's mainly from inflation. So you have to understand that. They noted, however, that these volatile components tended to contain little signal about subsequent growth, and that household spending and business fixed investment had remained strong in the first quarter. So they're saying the strong points of our economy are that households, regular people like you, are spending a lot of money. Well, we have got down to this, that our consumer credit is at all-time highs, which is a major issue because our savings are at all-time lows. And business fixed investments, so small businesses are doing good, America. That's what you're trying to say? No. These advances and the further tightening of the labor market conditions were judged consistent and significant underlying momentum in the domestic economy. In line with this judgment, participants expected that real GDP would grow solidly in the current quarter, this quarter right now, which is released tomorrow. In their discussion of the economic outlook beyond the near term, participants indicated that they expected the output would expand more moderately this year than in 2021, with growth this year likely near or above its longer run rate. So they actually anticipate, with inflation, with everything hitting our economy right now, that we're actually going to grow more than when they were pumping thousands, millions, billions, trillions of dollars into our economy. Yes, you are reading this right. And that the imbalance between aggregate demand and aggregate supply would diminish over time. And so a very key point they're talking about here, and we're going to get to here in a second, is they're talking about China as well with their big outbreak and the Omicron or wherever else they had. And they're saying that's a big thing about supply, which it could be. We've seen some plants shut down like Apple. Participants saw an appropriate firming of monetary policy playing a central role in addressing the imbalance and supporting the Federal Reserve's goals of a maximum employment and price stability. That's the main point I want to talk about here. Now, the main point down here is really going to shake you up. And this is all we're going to read is right here. Let me get a little bit of a zoom so you can see and follow along. Members concurred that the invasion of Ukraine by Russia was causing tremendous human and economic hardships. We won't decline this. Members judged that the implications of the war for the U.S. economy were highly uncertain. We agree. Members agreed that the invasion and related events were creating additional upward pressure on inflation, and were likely to weigh on economic activity. Members also agreed that COVID-related lockdowns in China were likely to exacerbate supply chain disruptions in light of the continuing inflation risk. Members judged that it would be appropriate for the post-meeting statement to note that the committee is highly attentive to the upside risk of inflation. Now, this right here, extremely broad, the last statement. Everything else, they are literally going with Biden, and it is infuriating. This is the most infuriating part. They're blaming inflation, all of this. They're saying the main points and problems are all because of China and Russia. And this is just nonsense, people. This is nonsense. So the point of all this Fed meeting, everything going on here, what I took from this and why you started to see a bounce in the market from this. So if you go back to the SPY, you can actually see as we zoom in here, in the day when you got this information, you started trending to the upside. Okay, that's what I want to talk about right here. The good news and why you were moving up is because they anticipate tomorrow the GDP to be good. They anticipate it to be positive. Now, this is why I think tomorrow is such a key day. There's two things you need to know. One, basically they said GDP is going to grow in the first quarter. That's what they said in this statement. If you read it, that's what they expect. They expect you to grow. They expect you to be healthy, be good. Okay. Now, if you come out tomorrow and you are negative, basic textbook and what they teach you in college is if you have two back-to-back negative GDPs, typically you are in a recession. Now, this is not completely factual, but this is a growing rule of thumb for most people in investing. When you have two negative GDPs, which rarely ever happens, you are quote unquote in a recession. Okay. The only time this ever happened was back in 2020. And then the previous before that, I think you almost had it in 18, but not quite there. So you didn't even get that push on the downside. Even with getting close to that in 2018, you saw a major recession type market kind of setting up. So that's worth mentioning. So if you get another negative tomorrow, we'll go over this in the video tomorrow, another negative GDP report tomorrow, in theory, you are in a recession. Not officially, but based on most studies, they'll say you are in a recession. So tomorrow, I think that the Fed has almost shoved their foot in their mouth. If you do not come out with a positive, anything above 0, 0.1, 0.5 doesn't matter. Anything above 0 will be just absolutely outstanding. So if you come out positive whatsoever, you're bullish, you're going to go crazy, you're going to probably have a great trading day. However, there's a major concern. So today, for instance, we've been seeing earnings come out. Today we had Nvidia on the after hours, and they actually reported decent earnings. So they actually beat on revenue. I think their EPS was solid as well. Yeah, they beat here as well. But then they adjusted their outlook, and you can see their outlook isn't that good. They went from 8.4 to 8.1, and this was the kicker. They're saying that they're saying that they estimate from this that they're going to see a drop down in profits from Russia, over $500 million just from that. Slowing down. So everyone's taking a step back, saying they're slowing down. Inflation's hitting us. Target, Walmart, we've already seen those get crushed on the XLP consumer staples. We've already seen all these were getting crushed on the last week, and now they're bouncing back up because inflation, these are going to do pretty well. If you're looking at the 1 hour chart, whenever you were sitting way up here, look, you were killing it. This was the only positive thing on the market, and then you got slammed after earnings on most of these stocks, and now you're trying to push back up. Got Costco this Friday, very big earnings as well. All these companies are getting torched and are getting killed right now, and it just has me to believe that it's looking kind of rough for GDP. Now, for me right now, I said I'm not trading this. I'm not touching this going into tomorrow. It's so risky. It's just not even worth it. So for me, I'm just waiting to see how this plays. I'll give you guys the data tomorrow. I'll tell you what I think, but as of right now, going into tomorrow, if this comes out negative at all, I'm a big bear. I'll trade to the downside. If it comes out positive, I'll trade to the upside. I'll be bullish. It's really that simple. Now, does this take us out of the waters for a recession? No, it does not. But I think in the near term, it could definitely set up for a break back to the upside. Best comparison is something that you saw back in March. You could start seeing something like this to get a V-shaped recovery pushing back pretty high. Now, am I saying you go back to 460? That's not what I'm saying. But you would definitely see some upside movement, maybe to around 420, 430 roughly up here if you do get positive GDP. Now, again, based on what I'm seeing from earnings, based on what I'm seeing from the numbers, it's extremely concerning. And I'm not convinced that big money is prepared for this right now as well. Because if you look at what's happening, if we look at the VIX in particular today, you're seeing lots of call options coming on the VIX, which shows people are hedging their accounts and their portfolios. Looking at the SPY, what's going on here? The put to call ratio. It's pretty even for every single call. There's a put. So you're seeing definitely the ratio coming in there, and you're seeing a lot of that liquidity in favor of the put side, which in my opinion shows they are hedging going into tomorrow. Looking at Qs, this is the only question mark, but it's still even more in favor of the put side as well. So looking at this, even with the strong push that we saw, and we did see a mighty strong push near the end of the day, all the way up to around 1203 on the Nasdaq. But look at that rejection once you entered that zone, which we have been mentioning. This is that same zone you touch. This could be queuing up to get the break of this low and start pushing back down to 10,000 flat, which in my opinion, if GDP comes out negative, it's setting up for a catastrophic drop. So again, right now, sitting on the hands, waiting for all these decisions. The last thing I'm going to look at before we get out of here is going to be Bookmap and the overall viewpoint on what's happening with big buyers in the market. Now, again, something that we haven't seen in a while, I'm just going to hide this indicator for you right now, is the CVD. Today's the first day we've seen in days that we've had a positive CVD on the ES all day long SPY futures. This, in my opinion, was really good and indicative at the end of the day you were going to get that push. And I was telling people in Discord, I like the push. What I was looking at personally, and I didn't even turn out that well, but I'm going to be transparent with you guys. It was all about the Tesla calls for me, and I was grabbing them, but you just couldn't ever hold value. So for me, I ended up getting in around 8:30, got in, and it just never really played out. 940, small gains, nothing great there. That's what I was looking at. I think there's potential here. I think things are really set up to run. However, you're not getting that key break yet. And I'm telling you, it's all coming down to GDP. That is the last roadblock right now. If you make it through GDP, you're going to run. Look at all these levels that you were breaking through near the end of the day. You had nice liquidity there, broke through it. Liquidity here at 4,000 proved to be pretty tough. You retraced and started bouncing near the end of the day. But I'm telling you, overall, if you can have a good GDP tomorrow, which again, I'm in favor of seeing a negative one. That's just what my opinion is telling me right now. But again, I have no horse in this race. I am not betting on this right now. But if you do get a good GDP, I will 100% be betting for upside pressure and most likely a test of 12.5 on the Nasdaq in a hurry, most likely tomorrow. That's my opinion on the market. That's what I'm looking at. If you have questions, please comment down below. I will try to answer every single question. But what you need to be looking at again is the possibility of getting some downside if you get rejected from this GDP. Again, that's all that matters. Tomorrow, 7:30 Central, I believe, is when GDP will be released, and you'll have your answer bright and early in the morning. I'll be covering it as well live in the morning for the pre-market breakdown. Have a good one, traders.